Well, we're going to start with Bitcoin because it is the biggest cryptocurrency and it is the leading indicator of sentiment just by virtue of its size. And when we look at this thing, we pulled back to a low of right around 33,000, somewhere around there. And on my linear chart, we didn't technically break this support, which sits at 32,768, but we stretched quite a bit to the downside once we look at this thing. So really, at least in this chart, and you're going to see on the log chart in just a second, we've stretched so far down that it seems like the first wave is a bit unlikely. It seems a little too stretched to the downside to just be a first wave of a larger 5-wave pattern down for a C wave, but I'm not going to rule out. It hasn't technically invalidated, and really it also means that technically our second wave, our green pattern is somewhat alive. We're going to look at that in just a second. Right now, the purple is my primary, and that tells us that we have a bit more downside left to go. So shifting to this logarithmic chart, this is a 4-hour chart for Bitcoin. We've had what I'm calling at least part of the C wave to finish our larger wave 4 correction as seen here, and it started in early November of 2021, and we've pulled back pretty sharply. We had our initial warning shot fired on December 3rd. We had a nice corrective bounce, and then we've pulled back pretty strongly. And on the linear chart, or I'm sorry, the logarithmic chart, you can see that we broke right through support. Based on what I was calling the first wave, we shouldn't break below the 2.0 extension of that in anything, let alone a corrective wave. So in this chart especially, it looks like our first wave, well, this is too long, too deep to be a first wave. It makes more sense to see this December 3rd spike down as our actual first wave. And that is what the purple pattern is conveying here. It tells us that that was a first wave. We had a second wave bounce, and we're in the midst of a third wave. And this may or may not be an ending diagonal form. The telltale sign of that would be that we have 3-wave subwaves within this, and we can interpret the first wave as a 3-wave correction, second wave as that, and then possibly the third wave as well. It's not totally clear yet. The other hallmark of a diagonal structure would be that our wave 4 bounce would get back above where the bottom of our first wave was. So if we saw some kind of a bounce, get up past 42,000, right up in this range, that'd be a strong indication that it is a fourth wave. In addition, you'd expect to see a zigzag corrective wave up. If we see a 5-wave impulse, that would be a strong indication that our bottom is already here. So again, in short, purple remains primary, and technically the green pattern isn't dead, but it doesn't technically invalidate until we until we descend below the original origin of what we would be calling the green first wave. That put us right around 28,566, something like that. So again, really, if our green pattern is the motive pattern of choice, it wouldn't really make much sense to hold through this correction. So I don't know if you should sell now. I did get out earlier, but it really doesn't make much difference from a practical perspective. Bigger picture, how much lower do I think we can go? Well, as I mentioned, this looked like an incomplete pattern on the big picture. We have basically our larger third wave structure here, and we have a big support right around the 24,000 mark, and it's actually better reflected in my other big picture logarithmic chart. Since we hit just about the 1.618 extension for what I was calling the larger third wave, our support sits at right around 24,431. So based on that, we actually have quite a bit of room left to the downside, especially with the latest bounce. We're sitting around 38,000. And well, the way this thing projects, it is definitely it's a valid target range for what I'm calling ending diagonal. So possible for us to go a little bit lower for Bitcoin.